morning, my friend. How are you doing?
Fantastic. I'm doing
So
fantastic.
this is going to be episode number 3 of Chea Chat. So let's tell the folks who you are, and let's get a brief intro of who you are, Carl. Please, Carl Worden III. More about yourself.
I'm glad you added the third in there.
Sure.
Yeah, so I'm Carl Worden III, and I wear many hats. I am real estate licensed, oddly enough, with Intero, but I don't pursue the real estate transaction like William does. I also am a financial advisor. I also represent a 1031 exchange accommodator, and I run a company called DEFERtax.com, and I've been teaching the subject of deferring taxes. It's my 11th year, Will.
Wow.
So in fact, this May will be my 11th year anniversary. I've taught at 86 different real estate offices throughout the Bay Area and several across country. Now we're doing a lot of this Zoom meeting stuff now, so it's been fun.
Good. Well, I know you and I have been working together for several years now. I've been very, very blessed. And as I've been telling folks, the cool thing about doing these type of Zoom meetings is I get to introduce now the entire team to everybody.
Right.
And I'm able to talk with you guys, and we can show everybody what you guys in particular bring to the table. So, I know you do the Delaware exchange, the 1031 exchange. You do all sorts of great stuff. Now, downsizing strategies, all that type of stuff, right? And we're going to talk about the downsizing strategy in a moment. But the biggest objection that I get here in the Bay Area is, well, we bought the house, a few years ago, several years ago in many instances. We paid $400,000 for it. And we put some money into it over the years, remodel, or maybe we've done an addition. Now, I'd love to sell it, and they would love to sell it, I should say. They're telling me they want to sell it. Now, we can definitely get them $900,000 for it, right? But here's the problem. That means, well, that's not the problem. $900,000, they get no tax bill, right?
Right.
But the issue is that the house is actually now worth $2 million or more.
Right.
So I'm not the tax guy here, Carl. And I always tell people, I've got the people that know. If I don't know it, I've got the people that know it. Now, when it comes to tax, no, not my area of expertise. So how can we get them the help that they're going to need? So, because most real estate agents will say, okay, we can do this, but you're going to have to pay capital gains because this is your primary residence. If it's your investment property, we can do an exchange, and that's the more traditional way. Tell us how you can help them keep more of those funds.
Yeah, so I do various different strategies. As I stated earlier, I represent an exchange accommodator, Exchange Solutions. I have for 11 years. And I've been a real estate investor. That's one of the other hats that I wear. But, one of the things that people probably know, but they don't know how to research is the various different tax deferral options. There's actually quite a few. You and I, Will, we both know this. We both know that the wealthy use various different strategies, and they have various different professionals on their team. In fact, most very wealthy people, and I'm talking, 5, 10, 100 million heirs. I recently met with one of the 50 billionaires in the state of California, believe it or not, Will. And and the interesting thing about all of them that have amassed a really decent amount of wealth is they always have a team. They've got a very solid real estate professional on their team. They've got a very solid CPA, trust advisor, tax attorney, a financial advisor, 1031 exchange accommodation service. And so what we've developed is a situation where when you come to us, you and me, Will, your clients get all of that by working with us, because at DEFERtax.com, we have the tax attorneys, trust attorneys, CPAs. I am a financial advisor. We have all of those people on our team. So, what we do is we work with people in their given situation And you know what's fun is we give them their lives. You know, there's a lot of people that, you know, especially the baby boomers. If you're a baby boomer, then that means that there is a high probability that roughly 80% or more of your net worth is tied up in your real estate.
Yeah.
That's a fact. You Google that. And, you know, their retirement accounts are, you know, they're not significant typically. I mean, the average is 250,000 or less for 80+% of them, but 80% of them are own real estate. So, you know, at some point in time, they're thinking, okay, well, especially now with the market doing what it's doing, right? I mean, you know, talk about creating some uncertainty.
Right.
Is, you know, now they're thinking, you know, and they have been thinking for some time, you know, I'm probably going to have to sell this house at some point. And people generally put it off. And, you know, of course, Will comes along and he says, hey, I know I can get you a great price, right? And Will he can get you a great price. The problem, though, is the tax bill. And so we have about 8 or 9 different strategies that we can use individually or in combination with another to basically enable you to cash out of your property and keep the money working for you in various different ways. So, you know, the fun part about what I do is I give people their lives. I just moved a family, as a matter of fact, from California to, of all places, Wisconsin. But they're an empty nester, right? Their kids moved to Wisconsin, and that's where their grandkids are. So, and they're just that typical client where they bought a property for $300,000. They put quite a bit of money into it, a total of 1.6 into the property, but the property is worth 3.8 million.
Wow.
And they have about $400,000 or $500,000 in their retirement, which is a decent amount of money. But it's, you know, that's not enough to last 30 years. You know what I mean? So I basically enabled them to sell that property for the 3.8 million. They bought a house for cash in Wisconsin. In 2 years, it's actually 1 more year left. They're going to be able to buy a second home in LA because guess what? That's where their other child lives, and they're going to rent that out and you know, go down there and use that as a business expense and be able to visit their grandkids there. I give them their lives. They get to do what they want. So, you know, without going into too much detail exactly how we do, I could bore you to tears, you know, on here on the various different strategies and how they work. But that's really what we do more than anything. Collectively, really, frankly, you and I do that, you know, for clients. So,
well, I think one thing too is that that's a great strategy for baby boomers, but I think just with the way things have gone over the last 6 weeks, I think that could be something that could be very interesting for anybody, because, you know, you've got folks my age that have bought a home, you know, back in 2004. You've probably got 40%, you know, good chunk of equity in that home. And now you're thinking, I mean, I know we're going to talk about the downsizing strategy shortly, but a lot of people now are going to start thinking about upsizing, not necessarily into, you know, a mansion or something, but something that's got that one extra room,
right,
just in case they've got a shelter in place, they need an office. You know, I've got my little studio here set up in our kitchen because it's got the biggest wall where I can put the little green screen, right? But if I could purchase a property, say, you know, and depending on your work, right, where my wife, you know, works, she's able to now do, you know, telecommuting, and I think that's going to be huge. One big thing of this is people are going to start being able to telecommute maybe 1 or 2 times a week. So you're going to start thinking, maybe going out down to Gilroy, maybe going down, you know, in the Central Valley that's still somewhat manageable.
right.
Somebody could sell their property here in the Bay Area where they thought, you know, wow, I sell it and I'm done. They can do one of your strategies, and now they can come back and maybe use the money that they were able to defer and now put that into an investment property, say, either in the town that they're going to be in or somewhere else. So now it's not just a retirement strategy per se, it's a wealth building strategy. What do you think?
Mm-hmm. Yeah, most definitely. And even the 1031 exchange can be used for that. Like you can convert your private residence, for example, to an investment property, go move to where you want to move to, let it rent there for, you know, ideally 2 years, but I've seen them, you know, get it a little over a year as a rental. They turn around, they sell it, they do a 1031 exchange, and they bring that money in to the area that they now live, and they buy rental properties, and that becomes their retirement picture. So that, you know, there's so many different things you can do and so many different ideas. And all they need to do is just set up an appointment with you and me, and we can go over that.
Since we're talking about 1031 exchanges, is a great segue. What are the new rules right now? We just got some new updates on since COVID-19. Can you give us the rundown on what the new timeframes are, the adjusted allowances for the timeframes are?
Yeah, if they're 45 days, falls in between May 15th and July 15th. Boy, you're putting me to the test here.
Sorry.
That's okay. They just came out with this idea, and I glanced at it the other day. But if your 45 days fell in the middle of a certain time period, and I believe we're in that time period now, then your actual 45th day gets extended out to July 15th.
And more than likely, they're probably going to extend that even further as these shelter-in-places either continue, or even if they're slightly modified. I mean, I don't think we're going to.
They certainly could.
Yeah, I don't think we're going to be able to go to normal real quick.
Yeah.
I think this is probably, for us in real estate, this is probably the new normal, which is good. I think it's good because we get to touch more people, more often. So let's go into a downsizing strategy for some of our boomers out there, or folks that are just saying, hey, you know what, the kids are gone. Why are we still in this 2-story home? 5 bedrooms, 4 bedrooms, and we really need something smaller. Talk to us about that.
Yeah. So when you buy a property, you establish something called cost basis. So let's say you paid $700,000 for a property, and maybe I should use a better number. Let's use maybe more like $500,000 for a property.
Yeah.
Make them here. That's your basis. So in other words, if you sold it for $500,000, in 5 years, you'd pay 0 in taxes. Then there's a concept called capital improvements, and that's something more substantial, like a roof, a room addition, kitchen or bathroom renovation, garage addition, something substantial like that. That could be added to your basis. So maybe you put, some money into that. Let's say you put $100,000 into the house, and now you're at $600,000 in the home. And over time, you've been wise. You paid the property down quite a bit, and maybe say, again, make numbers easy. Let's say you owe nothing on it. Okay. You have, and let's say the property is, as you stated, let's say it's, it's jumped up in value to say 1.8 million. Okay. So you got the $600,000 house. Of course, if you lived in it as your primary residence for 2 out of the last 5 years, you're married. You each get the $250,000 exemption. So now you're sitting at 1.1
right.
of sale price. Where, in other words, you could sell it for 1.1 and pay no taxes. Okay. The problem though is it's worth 1.8. So you've got this $700,000 capital gain, and it kind of, for a lot of people becomes a non-starter. They don't want to pay the taxes on the $700,000.
Huge hoagie floating out in the world right there.
It could be substantial. Certainly, they're willing to put it off for as long as possible. And so what we're able to do is, especially if they're an empty nester, the kids are moved out. I mean, a lot of people, they want to live closer to their grandkids. Some of them just want to travel, they want to simplify their lives and just, maybe get a smaller house and not have so much yard and all this responsibility. There's some retirement years, right?
They don't want to climb stairs.
They don't want to climb stairs, right? Exactly. So what we're able to do is we're able to take a look at their transaction, find out what the true basis is. And we work with the client's CPA, by the way. We actually even give the client a questionnaire to take to their CPA. And that questionnaire is designed to trigger the CPA to look into things they might otherwise not have looked into, because we really want to establish the client truly has a tax bill. Because if they don't, then we've done our job. They don't need us, right? Then you're able to list their home.
Yep.
But if they do find out they have a tax bill and it's one they don't want to pay, and I'll tell you, on $700,000, you're looking at somewhere between $200,000 and $300,000 of tax. So depending upon various circumstances. So what we do is we basically say, okay, look, you've got $600,000 of basis in the property. The property's paid off. What we're going to do is we're going to take advantage of a strategy called the deferred sales trust. But before we list it and before we set everything up, you're going to refinance your property, and you're going to pull out $600,000. Okay. And the reason why is because, the gains are anything north of that. right? So the base is 600,000. So you do a loan for $600,000 and you take that out and you put that in your bank account. And it's tax-free because loans are tax-free. Okay. Now you put the house up for the $1.8 million. Okay. And you sell it. Will sells it for you. Okay. The buyer's going to come in with the $1.8 million. The escrow officer is going to pay off the 30-day-old loan of $600,000. And then, and then ship the remainder of the proceeds to the seller of the property, which in this case is the trust. So at the end of the day, you've got $1.2 million that have been captured by this alternative seller. Okay. And the $600,000 loan that you took out just a month prior is paid off. And you got $600,000 sitting in your bank account, and you can use that to go buy your downsized property. Or perhaps add it to your retirement. I know people that are renting, I know people that are taking cruises. I know, there's a lot of people doing a lot of different things. And this money basically gives them an opportunity to free up their lives and do what they dreamed of. So, and to see this, obviously we did this on video and they can play it back and forth, but on my website, defertax.com, DEFER tax.com, you can go in there and you can actually see the downsizing strategy in about a 2 to 3 minute animated video, and you can get the access code from Will. Will's got an access code.
Yep.
It's a membership site. It doesn't cost you anything, but very wise for you to go in. There's various other strategies. You can actually watch the video on the deferred sales trust, what I just said, 1031 exchange, downsizing strategy. There's a slew of other different options in there for you.
It's a great site.
Yeah, and basically you can take a look at those things and then we can have a chat and discuss, how these things might work for you.
Beautiful, beautiful. I think that is very powerful information, Carl. I think the viewers will definitely take a look at that. I will make sure to include the link in the description down below this video. And any final thoughts for our friends out there?
Yeah, just one last thing, a lot of people think, you're always trying to sell something. One of the things that we try to do, and I say you and me, Will, when we talk to the client, we give them a questionnaire, and the questionnaire is really designed to determine whether they even have a tax bill. So we do put the client's interests first. Obviously, if you don't need a complicated tax deferral strategy, then don't do it,
right.
As the bottom line. If you do need one, we're going to find out the way to do it in the most honest and ethical way. And the fact of the matter is we are 100% referral based. We don't advertise. You don't see us on TV. We just work our way through the real estate industry. And as close knit of an industry as that is, if I did something wrong or if I did something that hurt clients, everybody would know and I wouldn't be talking to Will right now. So, we want to do right by you, and then we want you to refer us to, your 5 or 10 other friends who would like to free up their lives, and, enjoy the rest of their lives. So that's how I want to finish it off.
Beautiful. Thank you again for joining me, Carl. Great information. Very, very blessed to have been working with someone like you for so long, and for you to give me some time today. I really, really appreciate that. So for us here at Chea Chat, we'll chat with you soon. Thank you very much.
Thank you, Will.